All
Mhm.
right, welcome back, and we can talk about some little bit of Q&A on the co-living investment model that we are promoting
Mm.
quite heavily, and I'm very excited about it. And once again, my co-host is Julie. How are you, Julie?
Hey, SeeWing, how are you doing?
Yeah, fine, thank you. Julie is, one of our member of our real estate network of several thousand members we have on my network for the past several decades.
Hmm.
And our free member of our University Network, we provide turnkey access, we vetted our markets to our investors for many, many years, and it's up to our investors to our members to take action ultimately to achieve their financial goals. And that's what we do, right, Julie?
No, definitely,
Yeah,
absolutely.
yeah. Don't need to go into detail, but Julie is one of our members within our
Hmm.
network, and she had purchased multiple properties within our network a few years back, and
Right, right.
she couldn't be happier. So, uh,
Absolutely.
yeah, thank you. So I want to go over some today's topic. It shouldn't be more than 20 minutes.
Hmm.
So Julie, we're gonna go over a few misconceptions associated with the co-living investment model that
Right.
that we are promoting
Hmm.
at this particular time. So co-living, which is in my opinion, is a one of the most fastest
Hmm.
growing real estate asset class in the
Right.
country. Co-living, rent by the room,
Hmm.
one
Hmm.
room per member tenant,
Right.
and we have this great model. We're expanding very quickly. We are the only, Julie, you may not know that we are the
Hmm.
only organization,
Hmm.
the University Network. We are promoting only new construction, ground up build co-living.
Right, right, right.
Each bedroom have one private bathroom.
Hmm. Hmm.
So we are the only entity that are
Hmm.
doing this one to one ratio
Right, right, right.
across
Hmm.
the 40 different markets in the country. There are around 30,000 uh, uh, co-living properties are
Hmm.
being hosted by landlord investments.
Hmm.
And
Hmm.
most of those co-living properties located across the country, they are converted from traditional long-term rental. They're
Right.
converting from a three-bedroom, two-bath, or four-bedroom, two-bath into a seven-bedroom, two-bath, or
Hmm.
eight-bedroom, three-bath, whereby three or four tenants share a one bathroom private.
Hmm.
Not,
Right.
not the best situation. So, having said that,
Okay.
co-living is the fastest growing asset class, is
Hmm.
the most lucrative, uh,
Hmm.
or none, because on our model, seven bedroom,
Right.
seven bath, single family home, new
Right.
construction, seven bedroom, seven bath, each rent for $1,000 per bedroom,
Hmm.
per
Hmm.
room per month.
Hmm.
Just do the
Hmm.
math, right?
Right.
Our duplex 1414 in
Right.
Jacksonville, 14 rooms for $1,000 each, right?
Hmm.
And
Hmm.
we have upcoming quad in Jacksonville, a fourplex,
Right. 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 Hmm.
brand new fourplex, 1616,
Hmm.
and selling for 850. This is not official yet, but in a few days
Right.
it will become
Right.
official.
Hmm.
Mind-boggling. Our investors, they get a DSCR loan, debt service, a coverage ratio loan, no doc loan at 25%
Hmm.
down payment with a very good interest rate, a 30-year fixed rate mortgage, and finance these kind of properties. So
Right.
amazing, amazing. So I'm here to talk about any kind of misconception. So
Okay. Okay. You
you,
know, let me ask you a few questions because for me, co-living is a fairly new concept. I don't
right,
know
right.
how long it's been out there or whatever. How does co-living differ from just buying just a regular investment property? I mean, what's special about co-living?
Yeah, good question. So we compare to a long-term traditional rental. Traditional rental, three-bedroom, two-bath, right? We rent to a family for 1 year
Hmm.
annual lease. This is traditional
Right.
investing. Of all these years, we've been promoting this, and
Hmm.
we're still promoting this. Long-term rental, let's say for a $320,000 single family home,
Hmm.
a family will pay $2,000 monthly rent, right?
Right.
And you put down payment or 20 to 25% down payment. At the end of the day, your monthly net cash flow is like $200 or $300.
Right.
That's
Hmm.
fine, nothing wrong with that, right? And
Right. Right. Right.
a
Absolutely.
lot of people have done well. A lot of investors have done
Hmm.
well over many, many years. But
Right.
by adding three or four extra bedroom and three or four extra bathroom, you're able
Hmm.
to charge more on a
Right. Right. Right.
rent by the room model,
Hmm.
right? And we rent to the and we rent and we mainly rent to people who are working class people. People
Right.
cannot afford to buy a house. People cannot even afford to buy a studio, rent a studio apartment. Typically costs $1,500, even for a student. For one bedroom apartment or studio.
Right.
So therefore, they rent by the room through
Hmm.
us,
Right. Right. Right.
and
Right.
yeah,
Hmm.
through PadSplit. PadSplit, you can is our
Hmm.
marketing team, and they do all the
Okay.
marketing. Of course, landlord pay them a fee, marketing fee,
Right.
to get the tenants, members in. So
Hmm.
the extra few
Hmm.
bedrooms allow you to cash flow significantly, 3 or 4 times more than a traditional long-term rental. Go ahead.
Right. So when I'm what I'm envisioning, and some of your audience may see this too, I kind of envision like if you're talking about 8 unit or 8 rooms or 16 rooms or whatever, I envision like a big apartment complex, but it's really not that. It's a, how is it different than say buying a 16 unit apartment complex? Even in terms of financing, how would that be different? Buying a co-living.
Oh, that's a great question. Co-living, because our investors, our turnkey investors, like mom and pop investors like you and I,
Right.
can buy this kind of a property through us, brand new.
Hmm. Hmm.
The cost versus the rent is very, very favorable to us. Like I said, example, we have like I've been promoting like 320K single family
Hmm.
home, 1,800 square foot, right? 7 bedroom, 7 bath, $7,000 monthly rent.
Right.
You minus your 25% more percent mortgage. You minus
Right.
the utility costs we have to pay on the furnished rooms. You minus taxes, insurance, property management fee. At the end of the day, we have a net positive cash flow of $2,000
Nice, nice, nice,
as
nice.
opposed to a net monthly cash flow of $200 on a traditional
Right,
long-term rental with the same purchase price, same down
right,
payment.
right, right, right. Yes, I see what you're saying. I see what you're saying. And then it is considered like purchasing a single family, correct?
Yeah, in this particular case, yeah, also, although we have duplex, we have fourplex, but
Okay,
let's strict ourselves because of time limitation on
sure,
this
sure.
presentation. uh, 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 you know, uh, like an apple to apple comparison.
Right,
Yes, you're right.
right,
A regular single family home, cookie cutter single
right.
family home, 1,800 square foot, whatever, purchase price 320K.
Makes sense.
Traditional rental, like I said, it rents for $2,000 to a long-term renter. You cash flow a couple
Hmm.
$100 per month. Nothing wrong with that.
Hmm. Right.
But instead we rent by the room. Each
Hmm.
member have their own separate room, separate bathroom,
Got
and
it.
we go through PadSplit,
Hmm.
and they do all the marketing, all the sales, marketing,
Right.
everything else, and we hire additional property management on top of that to
Got
make
it.
that turnkey, make it hands off, just like a
Hmm.
traditional rental where you
Right.
where
Right.
you already have like 5 long-term rental property in Buffalo, Niagara Falls. You purchase through
Right.
us, right? 5 property, nice
Six.
portfolio. You
Actually
own
six.
six. Okay, I'm sorry, 6 doors. You own 100% all yours,
Right.
and you almost do nothing on a daily basis because you outsource to our property management turnkey. Same
Right. Okay.
process same price, whether you buy our single family home co-living 7 doors
Right.
or our duplex 14 doors or our upcoming 16 doors.
Mm-hmm.
Imagine you don't need a second job. It's almost passive. You
Right, right, right.
all the dirty work is done by PadSplit to do the sales and
Mm-hmm.
marketing, rent collection, and compliance, legal
Right.
compliance. Everything is all done for you. you just pay them a fee and they
Right.
pre-screen or they pre-screen the tenant. One thing, you know what? Another misconception. They think this is a
Mhm.
boarding house. It's not a boarding house.
Right. Right.
They,
Right. Right.
our member profile is like age 30 to age 60.
Mm, okay.
We have all type of tenants. We
That
have
was going to be a question. Who are potential tenants for a
oh,
property like this? That's a great
people,
question.
working class people. People have a limited income. People
Mhm.
making 30, 40, $50 an hour, maybe less. You know,
Mhm.
they would love to rent a
Right.
$1,000 per month instead of fifteen
Right.
hundred dollars per month on a studio apartment. Okay?
Right. Very good.
And we provide all the utilities for them. We
Hmm.
provide internet, we provide utility, garbage pickup,
Oh, nice.
your water, utility, gas, electric, and they share the kitchen, they share the living room, refrigerator, and all that. So
Right.
and we have a 95% occupancy rate for the past 1 year.
Oh, that's good to know.
Mhm.
That is very
And
good to know.
the evictions rate is less than 1%,
Hmm.
and the
Hmm.
average occupancy per tenant is around 6 to 9 months.
Right. 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 Wow.
It's
Wow.
almost like a long-term tenant.
Right. Yes.
It,
Yes.
it,
Yes.
so,
Yes.
yeah, PadSplit is the
Hmm.
amazing partner.
Hmm.
40,000 rental units across the country and skyrocketing. More and more investors are getting into co-living. But go ahead, you can
So
ask
it's
me
very,
some.
it sounds, it's like, to use the turnkey phrase, it sounds like it's really very much like what we've already been able to do in upstate New York,
Right,
but you're getting a lot more uh, units, basically, but it is being sold. Well, like when it comes to financing, I guess this would make question. When it comes to financing, it's being financed as a single family versus a commercial property. Is that
right.
right? Okay, which is very important because,
Yeah,
again, it allows mom and pops like me to be able to get into it where we may not have a down payment for a commercial property and all that goes
yeah.
with that.
Yeah,
Hmm.
1 to 4 unit residential investing,
Right.
30-year fixed rate mortgage, except the loan product is different. It's not a full doc
Okay.
loan. It's not a full doc
Okay.
loan. It's a DSCR loan,
Okay.
debt service coverage ratio, no doc loan. The loan underwriter, they underwrite the property, the cash flow of the property. You don't have to submit a W-2 stub. You don't have to submit your
Oh.
federal tax return. You don't have to submit anything other than your down payment
Hmm.
and your high credit score of 700 credit score and above. If
Right.
if the DRC are a lender, they underwrite the property correctly, which our co-living property, pass through underwriting. We have a proof of
Hmm.
concept already in the past few years, but
Hmm.
it really works. And the community living, all those tenant members, they get along.
Right.
You know why the eviction rate is so low? They are a member of PadSplit. Okay, these tenants, they could go from one PadSplit rental to another anywhere in the country, uh,
Oh, really?
as long as they maintain good membership, as long as they don't
Hmm.
messed up, as long as if they are on, if our tenant member, if they get evicted
Hmm.
from our property, they are
Right.
they are scarred forever. They cannot rent another PadSplit house in any part
Okay.
of the country, right?
Oh, that's very
So,
interesting.
so
So
they,
what you're saying
yeah,
is if someone is a tenant, say you've got a property in Jacksonville, Florida, and then maybe they want to move out of state to, I don't know, wherever you would have it, Texas, if you got another one. As long as they're in good standing, they could transfer their membership from
yes,
Jacksonville to Dallas, Texas, or wherever.
yeah, exactly.
That's
Yeah,
very interesting. That's very interesting. So as long as that's a great concept. I mean, because I can just see so many people like so many people are mobile. They can, doing
yep.
work from home. They can, work pretty much anywhere in the world. And if you're a member of this network, you can pretty much take this concept and live anywhere in the world, or eventually, I would imagine.
And pay 50% rent lower than a typical
Right,
studio or one-bedroom apartment,
right.
giving this
And I think
big,
that's the concept that your audience needs to understand. is that okay, well, you and I both live in California. Nowhere pretty much in California can you find anything for $1,000, any type of room living situation for $1,000. So yeah, that's a great opportunity for someone to get into something, have a night, and it's ground up. I think that's something that you want to really emphasize too. These are being built from ground up, so they're brand new units. So I think that's an exciting benefit. So where do you where right now, like I said, it's a new concept for me, but where do you have these where are they located? Like what areas, what
Yeah,
states, what cities?
in all the good markets, all the good markets
Okay.
in the country, the typical markets that we've been promoting all
Okay.
these years, Sun
Mm-hmm.
Belt, fast
Mm-hmm.
growing locations, job growth, population growth, migration growth, the whole fundamentals of a good
Right.
real estate investing long term.
Mm-hmm.
Mainly in Florida and, te and Texas, and in some other areas we are
Okay.
branching into.
Oh,
I
very
just
good.
want to emphasize our new construction. We are the only company, to my knowledge, right now in the
Okay.
country among 35,000 co-living houses spread
Mm-hmm.
across 40 markets in the country. I
Mm-hmm.
believe my organization and the builder connection that we have, my company
Right.
has, a Year Real Network, is the
Mm-hmm.
only good organization that will have this new construction co-living, one
Right.
bedroom to one bath.
Right. Right. Right.
Members
Right.
love one bedroom, one bath, whereas
Right. Oh, absolutely.
most member tenants on other 99% of all the co-living houses all across
Mm-hmm.
the country,
Right.
they have to share, the one bathroom with three or four other member tenants.
Mm-hmm.
That's
Mm-hmm. And let's talk about furnishings. How are the properties furnishings? Do the people bring their own beds and dresser
yeah,
and whatever? How does that work?
yeah. We have to pay the landlord.
Oh, okay, the landlord is
Yeah,
furnishing it.
yeah,
Okay, so
yeah.
that's a great deal for the tenant. They're just moving in.
That's right.
Yeah.
All the tenant do is when they move in, bring a toothbrush.
Yeah, exactly. I love that. Bring a toothbrush and a suitcase.
Yeah,
Yeah, that's no, that's excellent. Okay, so then as the owner, we're providing like obviously all for the living spaces, living room furniture,
yeah,
TV, whatever,
yeah.
and all the bedroom furniture, and of course, and then they
Yep,
just
yep.
move in. That's a great idea. And then when they are moving out, all this is handled through the property manager, and then
Yeah,
PadSplit jumps in to re-advertise
yeah.
to
That's right.
get it filled.
Yeah, yeah. I mean, with a 95% occupancy rate,
Right.
when a member tenant leaves for whatever reason,
Mm-hmm.
it take us like 1 week to clean out the bedroom. You know,
Right.
the
Mm-hmm.
bedroom, it will cost like $50 to $100 to clean out the room.
Mm-hmm. Right. Mm-hmm.
Our property manager, the housekeeping will clean the whole thing out, and PadSplit will market the rent real quickly, and
Mm-hmm.
within a week normally
Right.
you get a
Right.
new member to come in. So with that the vacancy are so low,
Right.
because most of the rents rooms are rented. We don't have a vacancy risk and out of
Mm-hmm.
pocket costs
Right. That makes
compared to
sense.
traditional rental, right?
Right. Now, I know I've talked to a few investors and they prefer to self-manage. Is this something that you would recommend somebody self-managing?
Well, that's a great question, but in my opinion, not initially. Initially,
Okay.
get your co-living property stabilized,
Mm-hmm.
just learn from it the first 1 or 2 years,
Right.
and pay PadSplit. PadSplit
Mm-hmm.
charge 8%
Okay.
monthly fee on all the rents. And then
Mm-hmm.
the co-living property management charge another 8%, right?
Okay.
For doing the daily property management and
Right.
housekeeping.
Oh, you know what? That's a
Yeah.
good point. Could you go into just a little detail? Because I think when I first started learning about this, I wasn't really understanding what PadSplit's role is versus the management company. So some of
Yeah.
your customers or your
Yeah.
tenant, your audience
Yeah.
might have that question as well.
Great question. That's why I love this Q&A, Julie. Your question is just like any other potential
Right.
investor, try to do your
Hmm.
research about what the co-living, makes
Right.
sense to you, right? It's
Right.
not cheap, paying 20 to 25% down payment on a
Right.
300K single family co-living house or on a $650,000 duplex co-living
Correct.
or a fourplex for 850K, 25% down payment is not going to be cheap,
Hmm.
you know?
Right,
So
right, right.
it's a
Yeah,
big,
exactly.
you know, yeah, it's you have to have the capital to do it and all
Hmm.
that. But having said that, what was I getting at? I forgot. Oh yeah,
Oh,
yeah.
we were talking
Oh,
about
pa-
explaining pad split versus the management company and how those kind
yeah.
of coexist
Yeah,
together.
yeah. Normally for out-of-state investors, like many of us, yeah, we kind of need pass split and property
Hmm.
management, and at least initially, so you can uh, stabilize it and then
Hmm.
to see how the system process and procedure works. But to answer your question, there's always some highly motivated investors out there that
Hmm.
ultimately they can decide to self-manage.
Right, right, right.
Whether
Hmm.
they live locally or they've out of state, they can do it.
Hmm.
And
Hmm.
they and eventually some investors they may not need pass split anymore
I see.
because they know how to market to these.
Right. So PadSplit does the marketing. They're
Yeah.
the marketing end of it. So which is really very important to me. It would be a very important piece because it's not like you have like one unit and you could run ads through Facebook or whatever. I mean, however people run ads, but when you're talking about trying to fill multi rooms, PadSplit sounds like it would be very valuable, even if you're paying the 8% or whatever. Yeah.
Just like short-term rental, when short-term rental was started
Right.
like 15, 20 years ago, they
Right.
have Airbnb as the marketing platform for short-term rental.
Right.
Now for this co-living, PadSplit is the marketing technology platform for co-living investment
Right,
model.
I see. I see. Okay. And then the management company basically does the day to day, like, there's a leaky faucet or whatever. So you
Yep.
call them, or the water heater goes out or whatever. So you're calling them for the day to day. And then in terms of rental collections, the management company is collecting the rents, just
No,
like
no,
with any
PadSplit.
normal.
PadSplit
Oh,
is collecting rent.
oh, PadSplit collects the rents. Okay. Okay. So
Yeah.
they do kind of have to coexist together. Yeah.
Yeah. Yeah. No, yeah. For most investors at the beginning, yes.
Right, right. I mean, I think that makes a lot of sense. I know for me, being, with our properties, they're 3,000 miles away. It's for me, whatever I pay the management company, it's worth every penny.
Yeah.
Because I don't
Mhm.
want to have to worry about somebody calling me at 3 in the morning saying the toilet is stopped up. I have somebody to do that. So
Yeah.
that's a great thing. So who would be an ideal investor for something like this?
Yeah, good question. The ideal investor people who are really motivated, they are very, very busy. They have a
Hmm.
full-time career. They have a family to take care of. They live in an expensive market, like
Hmm.
like where I live in San Francisco Bay Area for many, many years. Where you live in Southern California, LA area, we
Hmm.
are too busy.
Right.
We're not gonna we don't want a second job, right? We want to delegate and
Exactly.
outsource everything
Hmm.
to others so you we don't need a second job.
Right.
But if you the other people they have a lot of capital. Other investors
Hmm.
they have they have a lot of capital. They earn six-figure income.
Right.
Maybe they have stock options money. Maybe they have a
Hmm.
home equity line of credit because they have a lot
Right.
of equity from their primary home. They want to take out a home equity line of credit for 500K whatever.
Right.
I mean, not everybody can qualify because 20 to 25% down payment will you're gonna
Hmm.
come out of pocket about a
Right.
hundred
Right.
thousand,
Right.
$150,000 out of pocket down payment. So not
Right.
everybody have the capital and the motivation can qualify to do this. For those that
Sure.
qualify, the earnings, the cash flow is
Right.
astronomical, something I never seen before.
Right. I think that's the thing is the cash flow. Because I mean, I could easily see someone like myself, my husband retiring with this, like add something like a co-living situation to our already existing investment portfolio. We could retire and travel the world and not have to worry about it.
Let me give you a case study. Okay,
Okay.
we have a lot of case study already. We have a proof of concept for the past more than 1 year on our
Right.
new construction model. The single family home we talk about 320K, the 7.7
Right.
model.
Right.
Uh,
Right.
Even with 25% down payment, the net cash flow is 2 grand. If you
Very good.
let's say let's take this more ambitiously. Like you said, some
Hmm.
people they have the system, they have the skill set. They want
Right.
they want a second job. They
Right.
eventually they're gonna self-manage this kind of
Right.
co-living
Right. Right.
property.
Mm-hmm.
Some already, there are some hosts out there in other part of the country. They are already self-managing their own
Right.
co-living property. They are
Right. Right.
they
Right.
are they may or may not use they may have used PadSplit for maybe 1 year or whatever. They
Mm-hmm.
decided to get rid of PadSplit and
Mm-hmm.
market the tenants themselves, and they do a good job
Right.
because they technology, right? We talk about AI, all
Yes.
this internet, all this software out there, right? And
Mm-hmm.
people and a lot of co-living hosts out there slowly. I wouldn't do it.
Right.
If I own a turnkey PadSplit co-living
Right.
property, I would outsource and
Right.
delegate everything
Mm-hmm.
because I need to continue with my full-time
Your full-time traveling job.
traveling, my full-time
Traveling
traveling
the world. I love that.
traveling the
Cruising the
world.
world.
You know,
Yes.
if I
Mm-hmm.
don't, so anyway, imagine if you take away the 6%, I mean 8%, whatever, PadSplit
Mm-hmm.
fee, and you take away the co-living
Right.
property management,
Right.
your 8% plus 8% is 16% of the gross rent
That's true.
comes into your pocket.
Right.
Do the math. I've done it
Right.
on our co-living property, single family home, where you net 2,000 with
Right.
PadSplit and property management. If you take away
Right.
this two resource, your net
Right.
cash flow increase from 2,000 to 3,500.
Right. I see what you're saying. That's which is huge.
Huge. If you take
It's huge.
on a duplex, the 1414 model,
Mm-hmm.
$650,000 duplex, 14 bedroom, 14 bathroom. If you
Right.
take if
Wow.
you take the which you get a $5,000 net monthly cash flow, just like that, right? With
Right.
PadSplit and property management, 8% plus 8%, 16% of the rent.
Right. Right.
If you
Right.
take away these two scenario, your $5,000 monthly cash flow on a duplex becomes like
Mm-hmm.
what, 6,500 or $7,000 a
Wow.
month.
Yeah.
Now, if this number makes sense to you, would it be a right argument to say you can buy one or two of the co-living properties? You can pretty much retire
You really can. Yeah, you're
just like
absolutely
that.
right.
And you
You
don't
really
need a
can.
freaking 100 doors. You know those social
Right.
media, those social media for years, those
Right.
those fake real estate gurus say, I own 50 doors, I own
Right.
100 doors, or
Yes.
I own 1,000 units. But
Mm-hmm.
first and foremost, these are not accurate. These are
Right.
misleading. But
Right.
even if you in fact you own 50 doors or 100 doors,
Mm-hmm. Mm-hmm.
depends on what kind of doors, what kind of property you own, right?
Right. Exactly.
I'd rather own two or three rental property co-living,
Right.
uh, 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 using PadSplit or property management or
Absolutely.
not,
Mm-hmm.
because less stress, less headache. Your
Right.
two or three units equal 30, 40, 50 doors on other type of portfolio
Yes.
from what the most social media is telling you.
Right, right, right. Yeah. And I think the something that you said earlier about the 95%, or I guess it would be a 5% vacancy rate or whatever. I mean, that really cuts down on your risk. It really minimizes the risk of owning something like this. Because that's the thing, if you buy one property or even two properties, just single family homes, if it's vacant, and it's vacant for a few months, you're kind of up the creek without a paddle, as they used to say. But you see what I'm
Thousands
saying?
of dollars out of pocket for two
Yeah,
or 3 months of vacancy
exactly,
on a traditional
exactly.
long-term rental on a vacancy.
And see, I think again, that's the advantage of using the PadSplit slash, management fee combination, because it really takes the risk out of your hand. It really minimizes your risk. And we can't say it's guaranteed, but it's almost guaranteed, that you're going to be able to, get the income that you desire with properties like this.
Yeah.
It's a great concept. It's a newer concept, but I think it's definitely something that your investors should be looking into.
Julie, not just that, we have the best locations because our builder is the same
Mhm.
builder in Florida that has been building long-term rental for us all these years, the
Right,
turnkey
right,
build-to-rent model, right?
right.
Our
Mm-hmm.
two builders I'm working with. And the
Mm-hmm.
markets we're in is the best market. Jacksonville,
Right.
Tampa, Orlando, coming up.
Nice.
Ocala is coming up, and then
Oh, very good.
we have Houston. So
Mm-hmm.
our our build to rent co-living new construction model, our builder is powerful. Our builder working with my company, they
Yes,
are the nation's number six top builder in the country. So
very good.
when you have this type of, you know, iconic large builder
Mm-hmm.
entering
Mm-hmm.
the co-living space,
Right,
you
right.
know something's up. You know something's going on.
Right. Yeah, it's definitely something that people should be looking at now. I mean, I think we tend to, a lot of times people have this wait and see attitude, but I think this is definitely something. I mean, if you understand anything about investing and you don't have to be an expert, it is definitely something that you could maybe this isn't your first purchase that you make, but it's definitely something if you are already have some experience in investing, it's definitely a step up and a next level.
Yeah, absolutely. Julie, what other options do you have? Okay, look, a lot
Right,
of people they cannot afford to buy co-living properties. I get it. I get
right,
it, right? I mean, a lot of
right,
people can't. Many people could, right?
right.
Right? And so investor have to decide, what choices they want to make, what
Hmm.
strategy they want, what is their core, what is your like you said, what is your financial
Hmm.
goals? You want an early retirement? You want a more passive
Right,
income? You want to
right.
scale your portfolio? You want to buy with best return, best cash flow,
Hmm.
using a different model?
Great.
This is a new concept. People need to learn more about it. But
Absolutely.
we have the resources. We have done everything we vetted everything on the ground. We come
Hmm.
with a very highly good reputation, and our investors this past year have done very well, have
Right.
exceeded expectation.
Hmm. Hmm.
Yeah,
And I think that's something that is important too. You said you have done the vetting, and you have, of course, have done this for a number of years.
yep,
You've been in the business over 30 years. And so I think that that's important. That was important to me when I first started working with you, that these companies were tried and true, that you were recommending or, referring us to. And we had great success. Again, completely different model with the single family homes up in upstate Buffalo area, Buffalo, Niagara Falls, but I have not been disappointed.
yeah,
It's a great company, the management company, and everything has been wonderful. And so I just would really encourage your listeners that are listening to do more investigative work. And
yep.
and how do they get a hold of you if they want more information on this, SeeWing?
Yep, they can find me on the YouTube channel, SeeWing Yi, or they can enter my website, yirealestatenetwork.com, and
Hmm.
put their email on my newsletter database, so they can become a free
Hmm.
member of our organization, just like you have been.
Right. Right.
We have several thousand free member within our
Hmm.
network. They can have access to our investment opportunities, and finally, the best way to reach me is my text cell phone 510 five
Right.
five two 0726 for complimentary consultation to go over your goals, objectives, and to
Hmm.
see whether our products, our opportunities are in aligned with your financial goals. Yeah.
Right. I think this is great. I think, and again, I think a lot of times people are wanting to, well, if I do this, how do I finance it? I think maybe we'll do another one, maybe get more specifics on looking at the numbers and seeing, like some of the things you're talking about, the cash flow and all this stuff, maybe we can kind of break that down a little bit more so people can really see the benefit and how this would really work into their portfolio, their investment portfolio.
Yeah. Julie, as you know, I produce a lot of content on a daily
Yes.
basis.
Right.
You are,
Yes. Mhm.
you watch my video, my
Absolutely.
newsletters, through my network, through my company, and also through YouTube channels. But soon you and I can let's do a live event, from time to
Hmm.
time, maybe once a month,
Absolutely.
do a live event for our members. And so,
That would be great. I would love that. And I think that's how I learned, by a live event that you did, at our local city college. And again, I just want to encourage you listeners, look into this, take advantage of it. Don't wait till the ship has passed, and you know what I mean? Because this is something that can really change your life, in a major way, financially and otherwise.
yeah.
Legacy. It's really
Yeah.
about legacy.
Absolutely. It's a trust your process. You have a positive mindset, put together your capital, and hopefully this co-living strategy makes sense to us, some people out there. So if it does, then go full steam ahead, because this co-living real estate asset class is just the beginning of the tip of the iceberg.
Yes.
It's growing by leaps and bounds all over the country. So get in early because you can reap the best
Right.
benefit, but you gotta have to overcome fear.
Absolutely.
You have to overcome fear. You have to avoid all this doom and gloom, all the
Hmm.
negative news out there from social media that will
Right.
paralyze, analysis paralysis.
Exactly.
Way too many people sitting on the sidelines
Yes.
for no logical, rational decision other than fear-based because of all the
Right.
conditioning and brainwashing and programming of all the doom and gloom. The world's coming to an end daily
Right.
with negative social media, YouTube contents that are brainwashing everybody into thinking to sit on the sidelines because this and that and whatever.
Right.
You and I talked about this
Oh,
way too many
absolutely.
times past,
Absolutely. Mhm. And I'm just thinking you and I met, I guess, about 5, 6 years ago,
right?
or shortly after COVID or during that time, I forget. But I remember you talking about some properties in the Texas area that you had sold maybe several years earlier to a lot of your investors. And I remember thinking, man, I wish I would have met him a few years ago because that would have been a great, because you were talking about how much the value had grown on these properties and everything. And then I thought, oh wow, but then when I got in, it's like, okay, I'm not buying in Texas. I'm buying where we could afford to buy in upstate New York. But even now that it's been 5 years, it's like, okay, now I got in when I got in, and now I am reaping those benefits as well
Oh,
with the value, the increased rents and just everything, has gone up. So again, the longer you wait, the more opportunities that you
yeah,
miss. So, and
yeah.
if we're following Elon Musk, they're going to be building houses on the moon. So you want to get on that early too. No.
Well, Julie, I
But
tell you,
that'll be the next step.
yeah, that's
Co-living
right.
on
I
the
mean,
moon.
how the housing market is growing very strong. I know there's been some temporary downturns here and there, but
Right.
you
But
invest
you
for
never
the
lose. You never lose with real
you
estate.
invest for the long term, 10-year
Yes.
journey typically. And look, the best time to invest in real estate was 10 years ago, right? The second best time to invest in real estate was yesterday.
Right. That's exactly
And,
right.
the-
Exactly
and
right.
the
That's
third best
exactly
time to
right.
invest is today.
Today. There you go. That's a good one. I like that. I like that. And it's true. It's true.
Yeah,
Whatever you do today, it will make a difference in your life 5 years from now. So
that's right.
thank you for this. This was really good. It really helped clear up my questions, and hopefully for your audience it helped clear up some questions for them as well. Since it is a new concept, I'm sure they have a lot of questions. So I would just encourage your audience, give you a call, reach out in the different formats and get that information if it's something that you feel like you want to take advantage of.
Yep. Thank you so much, Julie. Thank you for your
Thank
insight.
you.
Thank you everyone for watching and see you guys next time. Have a nice day, everyone.
Okay, bye-bye.
Bye bye.